Morning folks, this is the Danielcode Gold Bulletin report for the 14th of October in which we're going to have a look at where our gold charts are showing that the markets are going, and more importantly where they're likely to go. We'll start off first of all with the trend charts, the gold trend charts. They're available free at the Danielcode website, that's at www.thedanielcode.com. And I'll just take you through these charts now so you can see how to read them and what they mean. They're longer term charts, they are weekly and monthly charts. They have quite definite signals and they have well-defined failure points. So we start off with our thinking about gold from the longer term charts, and from there we'll progress down to the shorter term trading charts. First chart we're going to look at is the Comex gold monthly chart from the trend chart, and you can see that that chart is on a sell signal. It's remained on the sell signal ever since March, and that we defined the failure point for that sell signal at 934.70, so we need a monthly close above 934.70 to reverse that signal. On the weekly chart for Comex gold, it's just in an indeterminate range. We don't have a directional signal. We're waiting for the next directional signal, and that would require, for us to get a weekly buy signal, for this week we'd require a close above 927.30. We move on then to have a look at the Huey charts. Many analysts like to have the Huey confirming signals in gold and silver. There is a fair bit of logic in this approach, because the Huey index is in fact the index of 25 unhedged major gold miners, and the logic is that if the movements in the gold price are real and sustainable, they will be reflected in the stocks that are producing the product. If we look at the Huey monthly chart, again from the free charts of the Danielcode, the monthly chart remains on its sell signal. It's been on a sell signal ever since March, and the failure point for this month is 363.82. That is, we would require a monthly close above that number to invalidate the sell signal. On the weekly chart, Huey elected the sell continuation signal last week, and it would now require a closing weekly trade above 303.60 to negate that sell signal. So our longer term charts are pointing down or indeterminate. There's certainly nothing on those longer term charts that make for a buy signal. What we said in the gold charts is that we're likely to see a protracted trading range in gold between 766 and 927, and that report came to you 2 weeks ago, so you should be cognizant of it. But with the big range bar on the chart, on the weekly chart, I say that daily signals will determine the next directional change. So we'll now move on and look at these daily signals, and they're very important for gold traders. The important thing for a trader is not to have a bias in the direction of the market. There's so much stuff out there in the gold world about fundamentals supporting gold, massive issuance of securities by not only the US government but now world governments, bailouts, deep insecurity, huge increases in the money supply. All of that is fundamentally bullish for gold, but fundamentals work over very long time periods, sometimes over years. And if you're a gold trader or you're trying to position yourself to buy gold longer term, you need to get down to the shorter term charts to find out where those signals are. And the market at the moment, because the gold market is essentially range trading, those signals are conflicting. We get one signal one way and one the other. But can we profit from that? Let's have a look at what happened last week in our gold charts, and we'll now go to the daily chart, and you'll see there that I refer continuously to the TO3 signals. Now the TO3 signals are signals that we provide to clients at the Danielcode. They're not part of the subscription. There's some little extra thing that I provide. Competent traders will use the gold and silver numbers at the Danielcode website to work out their own trades, but for those who aren't completely confident about their trading, or who have limited time to look at charts and have jobs to go to. A lot of our clients are part-time traders. The TO3 signals can be traded simply off a daily chart, which means you can place your order, place your stop loss, go away and have a look at it the next day. A better solution, of course, is to try and see the turn coming on a shorter term chart, and those who do will get in earlier and have smaller stops on their entries. But I want to show you today just what the TO3 signals have been doing to show you how you can profit from a precise knowledge of gold and silver markets and not just a wishy-washy emotional approach. If we look now at the gold chart, we can see that last Tuesday we had a TO3 buy signal just a bit above the Danielcode number at 831.30. The gold market elected that signal and the charts went up for 4 days. The numbers we were looking for at the top of the range were 932.40 and 937.40, and you'll see those numbers on the chart for daily gold. That buy signal was worth $8,900 per Comex contract. On Thursday of last week we had a TO3 sell signal in gold. The sell signal is good in TO3 signals, it's good for 2 days, and this particular signal was elected on the Friday. You'll see from the chart that Friday's trading made its high just right near the 937.40 number, and then down it went. That sell signal in gold was worth $10,700 per single Comex contract, and it's continued and gone a bit farther in the subsequent days. That, incidentally, was worth $107.30 on the bar alone. That is the biggest single daily bar in Comex gold. These are wonderful times for traders. We're seeing absolutely historic volatility. If you can position yourself to take advantage of some part of these moves, it'll be a wonderful thing for your P&L. We'll move on now and have a look at the silver charts, and you'll see that on these charts there's a mixture of gold signals and silver signals. Now, gold and silver are very, very highly correlated directionally, if not in quantum. So if you get a TO3 buy or sell signal in gold, it is likely to also be affected in silver. But you don't just trade silver if the signal is for gold. You take the primary signal and you look for confirming price action in the other correlated market. So if you look at this silver chart now, you'll see that it had the buy signal at the previous low. It ran up 2 weeks ago into a TO3 sell signal. That sell signal gave you wonderful trades in gold and silver. It then ran down, and last Tuesday you had the buy signal in gold, which was a big trade. It was nearly a $9,000 trade. But in silver you got the same trade, but it was more muted. But look what happened to the gold sell signal on the Thursday, executed on the Friday. Look how it worked in silver. That's the biggest day down ever in the Comex silver market, last Friday's price action, and it was worth almost $15,000, $14,775 per one contract. So the message here is that in times of historic volatility you need very precise entries, you need good risk control, and the TO3 signals are going to give you all of that, and the longer term gold charts are going to define the trend. So don't panic that you're going to miss the entries. The TO3s have been defining these markets for a very long time, and I'm sure they're not going to stop now. We invite you to go to the Danielcode to see the free gold chart and to find out more about these wonderful trades that may be of benefit to you.